And today we are going to take a look at gold, NASDAQ100, US30, and the SNP500. Basically, a midweek stock market update. And if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Now, if you enjoy the video, smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Today, we do have the JOLTS job openings, which is basically a monthly report on job and vacancies in the US commercial, industrial, and office areas. We also got the FOMC minutes that provides a detailed summary of the FOMC's discussion and to inform the public and Congress about the full range of policymakers' views and debate about monetary policy issues, including the diversity of views. So we can expect the data to come through today for both of that, which is high impact data. However, we are waiting for the NFP data to come through. Now, we are going to start this beautiful day with the NASDAQ 100. Now, on Sunday, I made a breakdown on the NASDAQ and I explained all of the reasons why we could see this move to the upside. And that is exactly what the market has given us. Now, from a monthly perspective, we could see how the market had came to test and reject this level. I also told you guys that you can expect the market to pull back to this level because this level over here acted as a strong level of resistance, broke above that, came to test it as support. Support did not hold. All of that support got broken and it's now acting as a level of resistance. So we could expect a further continuation to the upside from on the NASDAQ 100. Now on the daily time frame, what do we see? Now here on the daily time frame, we are stuck between a bullish and bearish structure in the market. Firstly, we do have the strong level of the resistance that the market had broken. It came to test it as support. We had that massive impulse. After an impulse, you expect a correction. Taking the Fibonacci from the low to the high, you can see how this previous level of support that has turned resistance is lining up perfectly with this previous structure that the market had created. Now, the problem we have over here is if you look left, you can see this level over here also acted as a structural level in the market. So the market's now stuck in between a level of resistance that got broken that is now turned support, and we've got support and we got the resistance got broken that is now acting as a level of support. However, we do know that in terms of our target level, we don't want to buy the NASDAQ up for the short term to this level over here. So that would probably be that head there as well. So this is basically where we are going to target in buying the NASDAQ 100. But the only way for us to achieve this is by very simple. Okay, we need to wait for this daily candle to close above this level of resistance. Once it's broken, all of that resistance would then become support. On that retest, we would then start looking for buying opportunities for the market to go and test and hit that previous level of support that is now turned resistance as we identified from a monthly perspective. Now, because the market is also trading at the strong level of the resistance, because we do have this massive impulse and we got that correction, we can expect a 0.382 pullback. If the market does give us a retracement today, then from there we can also start looking for buying opportunities. The short-term bias on the NASDAQ is bullish, but the long-term outlook will still remain bearish until we start trading in bullish structure from a monthly perspective. Next up, we do have the Dow Jones. Now, here on the monthly time frame, we got similar price action. The only difference here is this market over here is still trading above this previous level over here, acted as a strong level of resistance, broke above that, market came to test it as support, and we can see support has been holding quite firmly over there. However, we could see a dump coming very soon on this as well. Now, from a weekly perspective, we are trading in bearish price action or bearish structure. This level over here acted as a strong level of resistance, and you can see the market broke below that, support, broke below support, testing it as a resistance there as well. And the market had not giving us a clear indication that it's ready to break to the upside. If you go back on the weekly, on the monthly time frame, we also had this massive impulse. After an impulse, you expect a correction to at least a 0.382. Taking off Fibonacci from the high to the low there, we can see we do have a 50% pullback that's lining up perfectly with this structure, but a 0.382 pullback is normally expected. We now have such a bearish move to the downside. If you drop down on the daily time frame, you can see over here the market had been stuck within this consolidation, giving us no clear direction in terms of where this market wants to move. Now, this market over here came in this consolidation phase on the at this stage when this candle was printed over here, and we can see how the market had been trading sideways. And like I always advise you guys, the best way to trade a sideways moving market Just wait for a clear break above this level. Then on the retest, you can then start looking for buying opportunities for the market to go and hit that the 0.382 as we measured on the monthly perspective. Now this level over here is currently acting as a strong level of resistance. You need to wait for clear break above that level. Then on the retest, you can start looking for buying opportunities for the move to the upside there as well. Alternatively, if all else fails, we can then start looking for selling opportunities. But again, the short-term bias on the Dow Jones or on the stock market is for us to be looking for buying opportunities. We got similar price action over here. This level over here acted as a strong level of resistance once the market broke above that, and we can see support is holding quite strongly. And we can also see how the market is now currently busy breaking above this this daily level of resistance here on the SNP500 as well. And this would probably be a very good indicator to start looking for buying opportunities. Now in doing so, will the market now also complete the right leg of this W formation, which we can expect the market to go and complete there as well, which would be a good buying opportunity for the short term. And hopefully we will get the NFP data that's going to come through positive or negative, and we can obviously make another breakdown on there. Next up, we do have gold. Now gold has been very bearish because the dollar index had increased significantly in value throughout yesterday and today. Now someone had told me that someone out there has bought gold on their trade copier, and I would probably say good luck. But this is the reason why you need to always align your fundamental data with your technical analysis. That's fine. It's okay to say that technical analysis tells us we need to buy low, and that's probably the best time to have bought gold. But if you understand the demand for the dollar index is quite high at the moment, and because we are getting very close to interest rate decision, so people are continuously buying gold there as well. Now firstly, gold is trading at monthly support, and we can expect gold to dip even lower to go and test that level over there, which is 1746. Now if you don't know how to pronounce this, it's basically $1,746 per ounce, my friends. On the weekly time frame, what do we see? On the weekly, you can see it's quite clear. Gold has got some more move to the downside, and you can expect that to happen there as well. I'm kind of holding these sells on gold until this level hits over here, and not because I'm hedging against the retail trader with things you can trade. Next up here on the daily time frame, what do we see? Now from a daily perspective, it's clear that this is a falling knife. Now if you look on the daily time frame, there's nothing I can tell you that would make you get into this market at this point at the moment, because I'll just be lying to you. We have this massive impulse. Now if you take this Fibonacci from the high to the low, you've got a 0.382 pullback, but the structure on the market is so broken that you have these long liquidity wicks. The best way to approach this is to sit on our hands first, and then wait for the market to print some bullish, some green candles, and then for the market to print some clear structure, and then only from there could we start looking for buying opportunities in this market. I cannot tell you to sell this market because it's way too low to sell, but if you are a scalper, you could potentially get into the sell, and we can hedge together all the way to the downside to 1746. 1747 would probably be a round number till there as well. And then from there, it's not going to look good for gold, because I've said that gold used to be good tool to good precious metal to hedge against inflation, but gold is not an inflation hedge anymore. It's more of a currency hedge, and with the dollar index increasing and the negative correlation between the two, you can expect the price of gold to continue lower. And if you think it can't go that low, well, if it could go this high, it can go that low, and there's nothing stopping it from happening. Remember, the US inflation sky high. The only tool that the Feds have to bring inflation down is to hike interest rate, and when they hike interest rate, the dollar index increase in value and the price of gold goes down. And you've seen this happening. It's been falling since March this year. The gold has been plummeting to the downside. If gold takes out this, then gold's gonna go nose diving. Not like all the way down, but the price of gold is most likely going to continue lower. That's all from my side. Thank you for your time, and as always, cheers for years.